And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We're here to speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you got any questions or comments, feel free to email me at Aaron, Aaron, at Lighthouse with an L, lighthousecapital.co.il. That's Aaron, lighthousecapital.co.il. You can check me on the web at www.aaronkatzman.com. That's www.aaronkatzman.com. Be sure to follow me on both Twitter and LinkedIn and subscribe to our YouTube channel. We're getting rave reviews about the YouTube channel. So if you haven't yet subscribed, you don't want to miss out. You want to subscribe right away. So it's almost at the end of the year. And a couple things happen at the end of the year. One, we all go, where did the time go? It's already like, we're in December. When did that happen? I just told somebody yesterday, she said, wow, we're in December 2021. I said, I'm still back in July 1985. So everybody has their own perspective. But anyway, with December comes the year end. And for investors, traditionally, it's a time to sort of review your portfolio. With the surge this past year in global equity markets, there's a good chance you're probably sitting on some nice capital gains. If you were to take profits, you're going to have to pay some capital gains taxes. Nonetheless, there may be a way to help you lower your tax bill. Now, what I'm going to be speaking about is what is called tax loss selling, tax loss harvesting. You can Google either term and come up with millions of hits. It's also important for me to say, if you're going to go ahead and apply some of these strategies, first, you've got to speak to your accountant. Your accountant can help guide you. He can explain to you some of the rules. I'm not an accountant. I don't even play one on TV. Okay, that's how far away from an accountant I am. So speak to your accountant, consult with them in order to apply correctly the laws, the rules of tax loss harvesting, because it can be sort of complicated. Now, we spoke about gains, but also I try to keep it positive, but also investment losses. Believe it or not, you can actually profit from your investment losses. We'll get to that also. Even if you don't even have gains now, there might be benefits to taking losses now as well, since you can use them to offset future gains. They roll over into coming years, right? If you have more capital losses than gains, you may be able to use up to $3,000 a year to offset ordinary income on federal income taxes and carry over the rest of future years. That's pretty cool, right? So sometimes we have an investment that's lost value, believe it or not, but that can still do some good. Or at least you can limit the downside on the total loss. The strategy, right, where you can changes an investment, let's say, that has lost money into something which actually sort of called profitable, is what we said before. It's called tax loss harvesting. Tax loss harvesting allows you to sell investments that are down and replace them with reasonably similar investments. That's something to keep in mind, especially if you're going to be doing things with ETFs and what have you. There's special rules out there on what's considered a similar investment and what is not. So that's something also you're going to want to definitely speak to your accountant about. And then you can offset realized investment gains with those losses. The end result is that less of your money goes to taxes, woohoo, and more stays invested and working for you. Okay, so that's what we want, right? Isn't that that's ultimately the goal, right? So we talked about losses. Going back to what I said before, right? Well, you have nice profits, maybe some recent trades. If you bought some of the post-corona high-flying tech stocks, say since March, April, you might have some big losses as well, right? Unfortunately, when I advise clients to sell unprofitable stocks in order for the loss to be used to offset other gains, I usually get some pushback. They'd rather hold off on selling their stuff. I'll wait for it to go back up, right? It'll go back up, it'll go back, then I'll sell it, right? But that's not so rational, because why? You can profit from it now to take the loss and use it to offset other gains you have. And B, there's no rule that says it's actually ever going to go back up to the point you bought it at, right? And even if it does, if it takes 4 years, but you can buy another investment which is profitable from the get-go, wouldn't that be better, right? You have to sort of look forward when you're investing instead of looking behind all the time. As we spoke about tax loss selling, you may not realize it. And I tell clients this all the time. People complain, oh, I got to pay so much in fees, blah, blah, blah. If you're smart and you do things correctly, you could potentially save yourself so much money from tax loss selling that it pays for all of your fees and then some. It can save you, especially on how much money you have, it can save you tens of thousands, if not hundreds of thousands of dollars a year, if you are over time, that is, if you're smart about it and you implement it, right, on a regular sort of annual basis. Let's just get a real life example, okay? Let's say you bought Tesla, okay, and then you decided to sell it, okay, and you made gazillions of dollars on Tesla. All the naysayers who said Tesla will never keep going up, there's no value, it's valued for the price where it should be trading in 2050, all those kinds of things, you bucked the trends and you made a lot of money in Tesla, okay? But let's say back in March or April or May, you decided to buy some Zoom stock as well. And let's say the Zoom stock, which is all the rave, lost 40 or 50 or I don't know, 60% of its value. Okay, you know what you can do? You're not going to maybe make the whole loss on Zoom back, but if you sell that and then use that to offset the gain you had in Tesla, you're going to end up keeping a tremendous amount of your money currently to continue to be invested, right? You don't have to write out that extra check to the IRS. Now, what also is important, right? I always ask, why wait? It's customary for money managers, financial advisors, generally to wait until the last month or two of the year in order to implement tax loss selling. But there is no rule that says, wow, it's got to be done in October or November or December. You can do it in February if you want. You can do it in the first week of January if you want. It doesn't make a difference, okay? Just do it. Right? Keep in mind also one of the golden rules of investing, which is to ride your winners. Some of the most successful investment strategies call for investors to hold on to the good performing stocks and sell the laggards, because there's oftentimes good reasons that certain stocks keep going up and up and up, and there are also good reasons why stocks keep going down, down, and down. Okay? Wash sale. Okay, this is another reason you've got to speak to your accountant when you do this. It can be a little bit complicated, that is, implementing the strategy. Right? There's a rule in the US called the wash sale rule. Okay, according to the IRS, which disallows a loss deduction from the sale of a security if a substantially identical security was purchased within 30 days before or after the sale. Okay, for example, if you sold 100 shares of Nordstrom's, right, on December the 1st and then bought them back, the same 100 shares, let's say on December the 15th, okay, that loss deduction would not be allowed. The wash sale rule is designed to prevent investors from making trades for the sole purpose of avoiding taxes. We don't want to avoid taxes. We want to be efficient in the way we pay them. Okay, we want to be smart. We want to take what we have, right, and use it intelligently or strategically in order to lower the potential tax bill. Okay, it's important to speak, again, for like the 6th time, to your accountant before implementing the tax loss selling strategy. This is just to sort of alert you, okay, to the concept, to the wash sale rules, and everything sort of goes around the whole concept of tax loss selling, but you really, really need to speak to your accountant about it. And there's still time before the end of the year to implement it. If you don't get it done this year, you can always, like I say, get it done next year. You've been tuning in to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to you about your life, your money, and your investments. If you've got any questions or comments, feel free to email me at Aaron, A-A-R-O-N, at lighthousecapital.co.il. That's Aaron, lighthousecapital.co.il. You can check me out on the web at www.aaronkatzman.com. That's www.aaronkatzman.com. Be sure to follow me on both Twitter and LinkedIn. And of course, subscribe to our new YouTube channel where you get all this amazing information and more at the click of a mouse. All you got to do is subscribe. Thanks so much for tuning in, and we'll speak to you soon.